Welcome back to the Deep Dive.
It's great to be back.
Today we're going to be looking at IndiGo Airlines,
Oh, very interesting.
their 2023-24 annual report.
Okay.
We've also got some management discussions,
Right.
and we're going to be looking at how they've done over the last year and where they're headed.
Sounds good.
So IndiGo Airlines,
Yes.
as you might know, is the largest airline in India,
That's right.
and they've had this incredible journey, starting from just one plane in 2006
Wow.
to a fleet of 367 aircraft today.
That's impressive growth.
Yeah, it really is.
It really is.
And the Indian aviation market itself is just booming.
It is.
It's the third largest globally.
Wow.
And in this past fiscal year, 2024, it flew 184 million passengers.
That's a lot of people.
Yeah, that's a 14.5% jump from the previous year.
So what's driving this incredible growth?
Well, you've got a rapidly growing middle class,
Okay.
more disposable income,
Right.
and they're estimating that there will be 583 million people with the means to travel by 2025.
That's a huge market.
Huge market. And it's not just the big cities either.
No.
It's also Tier 2 and Tier 3 cities that are seeing a surge in demand.
Makes sense.
And to support all of this growth,
Yeah.
India is making big investments in their airport infrastructure.
So they're building the ecosystem to actually match this potential.
Exactly. And because of all this, you're seeing record-breaking aircraft orders
Yeah.
from Indian carriers, over 1,150 aircraft.
Really?
And IndiGo alone has placed the largest single order ever for 500 aircraft.
Wow, 500 aircraft.
That's a lot of planes.
Yeah, they're going big.
Yeah, they are. And by 2030, they're aiming to have a fleet of over 600 aircraft.
So they're really betting on the future of Indian aviation
They really are.
and their own role in it.
Yeah, so with this rapid expansion, what challenges does IndiGo face in terms of competition?
That's a great question.
Because the Indian aviation market is becoming increasingly competitive.
It is.
You've got domestic and international players all vying for a piece of this pie.
Right.
So IndiGo's really got to, play their cards, right?
Absolutely.
To maintain their market leadership.
It'll be interesting to see how they navigate this landscape.
Yeah, so how are they approaching this challenge?
Well, in their report, they outline this strategy called Towards New Heights and Across New Frontiers,
Okay.
which is built on 3 pillars.
Right.
Reassure, develop, and create.
So let's break those down a little bit.
Okay.
What does reassure mean in this context?
So Reassure is all about operational reliability and ensuring a seamless customer experience. So
Right.
you're talking about safety, on-time performance, hassle-free service.
Things that build trust.
Exactly. Building that trust and loyalty.
Okay, and then develop.
So Develop focuses on strategically expanding their network and their fleet.
Right.
So remember those 500 aircraft.
Yeah.
This is where it comes in. They're adding new routes, both domestically and internationally.
So reaching more destinations.
Yes, expanding their reach and capturing a wider customer base.
Smart growth.
Exactly.
Okay, and then create.
Create is all about innovation, particularly in areas like digital technology and sustainability. They're leveraging technology to enhance the customer experience,
Okay.
streamline operations, improve efficiency,
Yeah.
and they're actively working to minimize their environmental impact.
Which is becoming more and more important.
Absolutely a key focus in the aviation industry today.
It sounds like a comprehensive approach.
It does.
But is it actually working?
Well, to really understand that, we need to look at their business model and how these strategic pillars translate into operational highlights.
Yeah, let's dive into that.
Sure.
So what are some of the key elements of IndiGo's business model?
Their model centers around providing affordable fares without compromising on quality or service.
So it's low cost, but with a focus on, good service.
Yes.
Exact time performance.
Right.
Hassle-free experience.
Exactly.
And it seems to be working because they welcomed a record 100 million customers in a single calendar year.
That's an incredible milestone.
It is. And they're operating, 2,000 daily flights.
Wow.
Carrying over 300,000 passengers a day.
That's a lot of people moving around.
It is. And in fiscal year 2024, they flew 107 million passengers.
Okay.
Which is a 25% increase from the previous year.
So their operational figures are really painting a compelling story.
They are, but how do they actually make money?
Well,
What are their revenue streams?
so the bulk of their revenue comes from passenger ticket sales.
Okay.
But they also have these ancillary revenue streams, things like baggage fees,
Okay.
in-flight meals,
Okay.
and seat selection.
Okay.
So these additional services, while they might seem small,
Yeah.
they actually contribute significantly to their overall profitability.
So it's about, maximizing revenue opportunities,
Right.
but without straying from that core value proposition of affordable fares.
Yeah, exactly.
Okay. And this approach has obviously helped them secure a dominant market position.
Absolutely.
They're India's largest airline.
Mm-hmm.
And they're constantly looking at ways to strengthen their hold on this rapidly growing market.
Right.
So they've got the growth.
Yeah.
They've got the business model.
Mm-hmm.
You've got the market position.
Uh-huh.
But what about the financial side of things?
That's the next piece of the puzzle.
Are they as healthy financially as they appear to be operationally?
Well, to understand that,
Yeah.
we need to delve into their financial statements and key ratios.
All right, let's do it.
Let's go.
All right, so we're diving into the financials now. What can you tell us about IndiGo's profit and loss statement? What story does it tell?
Well, the first thing that jumps out is their revenue growth. It's soared to an impressive 689 billion rupees.
Whoa, that's huge.
Yeah, it's a testament to their expanding network and those growing passenger numbers we talked about.
Right, and are they actually making a profit?
They are. Their profit before tax stands at a healthy 80 billion rupees.
Wow, that's a significant turnaround from the previous year when they actually had a loss.
Yeah, it is. It's a pretty impressive swing.
What factors contributed to this turnaround?
Well, a combination of things, of course, increased passenger traffic played a major role.
Yeah.
But they've also been very strategic about managing their costs.
Okay, how so?
Well, they've focused on operational efficiency, they've been negotiating favorable fuel prices, and they've optimized those ancillary revenue streams we talked about.
So it's not just about increasing revenue.
Right.
It's also about keeping costs in check.
Exactly, a classic formula for success.
It is. All right, so let's move on to their balance sheet. What insights can we get from that?
Their balance sheet reveals a strong financial position. They have a healthy mix of assets and liabilities,
Okay.
which suggests a well-managed financial structure. One thing that stands out is their significant investment in aircraft.
Right, those 500 new planes?
Yeah, that's reflected here.
That's a major asset.
Yeah.
But it's also a significant financial commitment.
Yeah.
So how are they financing this ambitious expansion?
They're using a combination of internal funds, debt financing, and lease agreements.
So it's a balancing act.
It is. It's about making sure they have the resources to fuel their growth without taking on too much risk.
That makes sense.
Yeah.
What about their cash flow statement?
Okay, their cash flow statement paints a positive picture as well. They're generating strong cash flow from their operations.
So they're making money and they're collecting that money.
Exactly, which is a good sign.
Yeah.
It indicates they're effectively converting their profits into actual cash.
All right, so to really understand their financial health, we need to look beyond just the raw numbers. What key financial ratios should we be paying attention to?
Some key ratios to consider are their profitability margins, their debt-to-equity ratio, and their return on equity.
Okay, so break those down for us. What are these ratios telling us?
Their profitability margins indicate how efficiently they're generating profit from their revenue.
Okay.
And their margins are looking good. It's good.
Suggesting they're running a tight ship. Their debt-to-equity ratio measures their financial leverage.
Mm-hmm.
And while it's not alarming, it's something to keep an eye on as they continue to expand.
Right.
And their return on equity, which measures how effectively they're using shareholder investments to generate profit, is also quite healthy.
So overall, it sounds like they're in a pretty strong financial position.
Yeah, I'd say so.
They're profitable, they're generating cash, and they're managing their debt responsibly.
That's right.
But financial health is just one piece of the puzzle.
Huh?
What about the people behind the numbers, who are the promoters and management team driving IndiGo's success?
That's a crucial aspect. The report highlights the promoters' background and their commitment to building a strong leadership pipeline.
Okay.
These are individuals with a lot of experience and a clear vision.
So tell us a bit more about their background. What are their credentials?
The promoters have a long and successful track record in both aviation and business.
Oh, okay.
They bring expertise in operations finance strategy. They know what they're doing.
They do. They have the experience necessary to navigate a complex industry like aviation.
But strong leadership isn't just about the top brass, right?
Right.
It's also about building a talented and engaged workforce.
Absolutely.
What is IndiGo doing to attract and retain top talent?
Well, they're investing heavily in initiatives like the 6E People Beacon and Empower to Lead programs.
Okay, what are those about?
These programs focus on developing leadership skills, fostering a culture of growth and opportunity, and creating a positive work environment.
So they're really putting their people first.
They are, but attracting and retaining skilled personnel in this industry can be a real challenge.
Yeah. How are they positioning themselves to compete for top talent?
Well, of course, they're offering competitive compensation packages,
Okay.
but they're also going beyond that. They're focusing on creating a workplace culture that values innovation, collaboration, and personal growth.
So it's not just about the money.
It's not, it's about creating a place where people want to work and grow.
Right, make them feel valued.
Exactly.
But even with a solid team and strong financials, there are always risks involved in any business. What are some of the key risks that IndiGo faces?
That's an important question. The report outlines several key risk factors, both internal and external.
Okay.
One major concern is the rising cost of fuel.
Yeah, fuel prices are always a concern.
They are particularly sustainable aviation fuel.
Right.
Fuel prices are notoriously volatile, and any significant increase could really impact their profitability.
Especially with them investing so heavily in a new fleet.
Exactly.
What other risks are they grappling with?
Another concern is the increasingly competitive landscape. New players are entering the market,
Yes.
and existing airlines are expanding aggressively.
So they got to stay ahead of the curve.
They do. They need to constantly innovate and find ways to differentiate themselves.
What other external factors could pose a challenge?
Well, global economic fluctuations are always a concern.
Right.
A downturn in the global economy could impact travel demand and put pressure on their bottom line.
Yeah, that makes sense.
And evolving environmental regulations are also a key consideration. The aviation industry is under increasing pressure to reduce its carbon footprint. And IndiGo needs to adapt to these changing regulations.
So they got a lot to think of.
They do. Navigating these risks requires careful planning and a proactive approach.
What are they doing to mitigate these potential threats?
Well, they're hedging against fuel price volatility.
Okay.
They're exploring alternative fuel sources, and they're investing in fuel-efficient aircraft.
So trying to get ahead of the problem.
Right, and they're also strengthening their cybersecurity defenses to protect their systems and their customer data.
So it's a multi-pronged approach.
It is. They're addressing the internal risks like cybersecurity and the external risks like fuel prices and economic fluctuations.
Okay, so let's go back to their growth plans for a moment.
Sure.
They're aiming to have a fleet of over 600 aircraft by 2030.
Ambitious.
It is. How are they planning to fund this massive expansion?
Well, that brings us to the use of funds and valuation. Their report outlines how they plan to allocate capital, and it's primarily focused on fleet expansion.
Makes sense that those 500 new aircraft are going to require a significant amount of capital. How are they planning to raise the funds?
They'll be using a combination of internal funds, debt financing, and lease agreements.
Okay.
Their strong financial performance and positive cash flow give them some flexibility,
Right.
but managing their debt levels will be crucial.
It's all about finding that balance
It is.
between funding growth and maintaining financial stability.
Right.
Okay, and what about valuation? How is IndiGo's value perceived in the market?
Well, their strong financial performance, ambitious growth plans, and dominant market position have all contributed to a positive market valuation.
Okay.
Investors seem to be confident in their ability to execute their strategy and generate long-term value.
So the market believes in their vision.
It seems that way.
Okay, but who are the key players shaping that vision? Who are the major stakeholders in IndiGo?
That brings us to their shareholding pattern. The report provides a breakdown of who owns what.
Okay, let's dive into that. Who are the major stakeholders?
The majority of the shares are held by institutional investors and the promoters.
Okay, so those are the key players.
They have a significant influence on the company's direction.
So it's a mix of institutional investors who are primarily focused on financial returns,
Right.
and the promoters who have a more vested interest in the long-term success of the company.
Exactly. And this balance of ownership can impact the company's decision-making process.
How so?
Well, they need to consider the interests of both groups, balancing profitability with long-term growth and sustainability.
It's a delicate balance,
Yeah.
but transparency is key in situations like this. How transparent is IndiGo about their related party transactions?
They emphasize transparency. They're guided by their RPT policy, which is designed to ensure that any transactions involving related parties are conducted fairly and in the best interests of the company.
Okay, so what exactly are related party transactions? Can you give us a quick rundown?
Sure, related party transactions are essentially any dealings between the company and individuals or entities that have a close relationship with the company.
Ah,
This could include transactions with the promoters, their families, or other companies they control.
I see. And why is transparency so important in these types of transactions?
Because there's always a potential for conflicts of interest.
Right.
Transparency ensures that these transactions are conducted fairly and don't unfairly benefit the related parties
Okay.
at the expense of other
So
shareholders.
it's about safeguarding the interests of all stakeholders and
Exactly.
maintaining a level playing field.
Right.
It sounds like IndiGo is taking steps to ensure these transactions are above board.
They are.
But even with a strong focus on transparency, related party transactions can be complex
They can.
and require careful scrutiny.
Absolutely.
What are some of the challenges they face in managing these transactions?
One challenge is ensuring that the terms of these transactions are competitive
Well,
and don't disadvantage the company.
right.
It's important to demonstrate that these transactions are conducted at arm's length as if they were with an unrelated party.
So as if there was no special treatment.
Exactly.
All right.
Another challenge is managing the perception of these transactions.
Yeah, even if they're legitimate, they can raise concerns.
They can, especially if not handled transparently.
Right. So it's about being proactive, setting clear guidelines,
hmm
and communicating openly about these transactions to maintain investor confidence.
Exactly. And that brings us back to the bigger picture. We've looked at their financials, their management, their risks, their shareholding pattern, and their approach to related party transactions.
Yeah, it's been a pretty thorough overview
It has.
of their current state and their plans for the future.
Right.
But before we wrap up, I want to touch on one more crucial aspect,
Okay.
sustainability.
A very important topic.
It is, we briefly mentioned their commitment to reducing their environmental impact earlier, but I think it deserves a deeper dive.
I agree. Sustainability is becoming increasingly important in the aviation industry.
And IndiGo seems to be taking it seriously.
They are.
So let's explore that in more detail. What are they doing to minimize their environmental footprint and contribute to a more sustainable future?
Well, they've implemented a number of initiatives
Okay.
aimed at reducing their carbon emissions and promoting sustainable practices.
Give us some specifics.
One key area is their fleet modernization. They're investing in newer, more fuel-efficient aircraft,
Okay.
which significantly reduces their fuel consumption and carbon emissions.
So they're literally flying greener.
They are, in fact, 78% of their fleet consists of the latest generation aircraft.
Wow. So they're one of the most fuel-efficient airlines in the world.
One of them, yeah.
That's impressive. What other initiatives are they pursuing?
They're also promoting the use of sustainable aviation fuel, or SAF.
Okay, I've heard of that. What makes it more sustainable?
SAF is produced from renewable sources,
Okay.
like plant oils and agricultural waste, which significantly reduces its carbon footprint compared to conventional jet fuel.
So it's a more environmentally friendly way to power their aircraft.
Yeah.
But isn't SAF still a relatively new and expensive technology?
It is. The availability and affordability of SAF are still major challenges for the aviation industry as a whole.
Right.
But IndiGo is actively working with suppliers
Yeah.
who are developing SAF to try to contribute to the growth and adoption of this cleaner fuel source.
So they're looking ahead.
They are investing in the future of sustainable aviation.
What other steps are they taking beyond fuel efficiency and alternative fuels?
They're implementing a range of initiatives across their operations.
Such as?
For example, they're promoting electric vehicles in their ground operations.
Okay.
And they're using renewable energy at their training centers.
So it's a holistic approach.
It is encompassing everything from their aircraft to their ground operations.
They're really trying to integrate sustainability into every aspect of their business.
Exactly. And it's not just about compliance with regulations.
Okay.
They're going above and beyond, setting ambitious sustainability goals and actively working to achieve them.
It sounds like they're truly committed to flying green.
They seem to be.
Yeah, it really does seem like they're walking the walk.
They are.
It's not just talk.
It's good to see.
So it's fascinating to see how they're balancing this ambition with this commitment to sustainability.
Yeah.
They're not just focused on, expanding their fleet, but also on doing so responsibly.
Absolutely. And that commitment to responsible growth, combined with their strong financials and their strategic approach, I think suggests that they're well equipped to navigate the challenges ahead.
But the Indian aviation market's incredibly dynamic. What do you see as the biggest potential hurdles for IndiGo?
I think one of the most significant challenges will be managing this rapid growth. Scaling up operations while maintaining quality and efficiency is no easy feat.
It's not just about adding planes and roads, right?
Exactly. They'll need to carefully manage their resources, their infrastructure, and their workforce to avoid those growing
So
pains.
the whole ecosystem has to be able to support that growth.
Right.
And what about competition?
Competition is definitely heating up. New entrants are emerging, and existing players are becoming more aggressive.
So they've got to stay agile.
They do. They need to constantly innovate and find ways to differentiate themselves to maintain that market leadership.
Right. They can't just rest on what they've done so far.
No, they have to keep moving forward.
And then there's fuel prices and the global economy.
Yeah, those are big ones.
Those are external factors that are pretty much beyond their control.
Exactly. Fuel price volatility and global economic fluctuations are wild cards that could really impact their profitability.
So they need to have those contingency plans in place.
They do, just in case things take a turn.
It's like they're flying through this constantly changing weather pattern.
It is. They need to be prepared for turbulence and adjust their course accordingly.
So after this deep dive into their annual report
Mm-hmm.
and these management discussions,
Yeah.
what's your overall assessment of IndiGo? Do you think they have what it takes to achieve these ambitious goals?
I think they're in a very strong position. They've got a clear vision,
Okay.
a solid strategy, a proven track record, and a strong financial foundation.
So the ingredients are all there.
They are. But success will ultimately depend on their ability to execute their plans, to adapt to changing market conditions, and to navigate those inherent risks of the aviation industry.
So it's not just about having the right ingredients
No, it's about knowing how to combine them effectively.
and being able to adapt.
Right. It's a dynamic process. It's not static.
And that's what makes the future of IndiGo so interesting.
It does. It's a company in motion, always striving to reach new heights.
It's going to be fascinating to watch.
It will.
And for our listeners who want to follow along,
Yeah.
we encourage you to explore IndiGo's annual report
Mm-hmm.
and all the other information that's out there.
Absolutely.
There's a wealth of knowledge waiting to be discovered.
There is.
But for now, we've reached the end of our deep dive.
Okay.
We hope you've gained some valuable insights into the world of IndiGo Airlines
Mm.
and the Indian aviation sector as a whole. Thanks for joining us.
Thanks for having me.